Ladies and gentlemen, good day and welcome to the Rites Ltd Q4 and FY2024 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mudit Kabra from Elara Securities. Thank you and over to you, sir.
Thank you, Steve. Good morning, everyone. On behalf of Elara Securities, we welcome you all for the Q4 FY24 and FY24 earnings conference call of Rites Ltd. I take this opportunity to welcome the management of Rites, represented by Sri Rahul Mithal, Chairman and Managing Director, Sri Arun Kumar Singh, Director Projects, Dr. Deepak Tripathi, Director Technical, and Sri Krishna Gopal Agarwal, Director Finance. We will begin the call with a brief overview by the management, followed by Q&A session. I'll now hand over the call to Rahul sir for his opening remarks. Over to you, sir.
Morning. Thank you. Let me begin with the safe harbor statement. The presentation and the press release which we uploaded on our website yesterday and discussions during the call today may have some forward-looking statements. These statements consider the environment we see as of today and obviously carry a risk in terms of uncertainty because of which the actual results could be different and we do not undertake to update those statements periodically. Thank you for this and let me give you a brief overview of where we started the year and where we ended up. The two huge challenges as you all have been following us quarter on quarter were the order book on export below 100 crores at the beginning of FY and the impact of the change dynamics in the QA business which was to start hitting us from Q1 of last FY. So we were very clear, we wanted to take the challenge head on. We had a three-pronged strategy to tackle and minimize the impact of these two huge challenges. The first one was to try aggressively and get at least one export order which we had not got for the last 4 years. And in the first one, we got two orders, 1,200 crores Mozambique plus Bangladesh. The second was to minimize the impact of the IR element, which is about 2/3 of my quality assurance business, a huge margin contributor. So by the end of the year, successively quarter and quarter, we managed to get a large number of non-IR clients and customers, wherein the ratio from 2/3 to 1/3, IR to non-IR, has now flipped to about 50% plus on non-IR clients and getting huge orders like about 67 crores from PM Vishkarma scheme, getting orders from the GEM portal, etc. And the third was to maximize the project consultancy revenue to minimize the impact of the QA revenue. And that too saw a substantial 10% jump year on year. In fact, the total consultancy revenue reached a figure of about 1,300 crores, which is an all-time high, which was a huge satisfaction to us because it is moving in the right trend and could help minimize the impact of the two challenges. So in a nutshell, the direction which we had set out in the beginning of the year, we are moving sequentially in the right direction and having set a platform in the last 2 quarters, especially in terms of the orders coming and the diversification in the QA business, we are sure that the coming FY, we will definitely build up aggressively on this base and give you a much better set of numbers, especially in terms of the EBITDA and the bottom line. So that's a brief overview, and as we go into specifics, I will go into specific numbers and the way forward. We can start taking the questions one by one with it.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. A gentle request to all participants that you may please limit your questions to 1 per participant, and for further question you may join back the queue again. We will wait for a moment while the question queue assembles. Thank you. First question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the opportunity. So my question pertains to, the margin profile. So now that, we've moved more towards the competitive base and large part of our orders, be it international or even in domestic, are on a competitive base bidding, the margins, this quarter were much better over last 3 quarters. So can we take this as a benchmark or, take this as a guidance going forward as well?
Yeah, morning, sir. I think, yes, that's, if you see the sequential trend of margins, and you're correct that both in terms of international business, these 2 export orders were global tenders. For the first time, maybe in the last 4 decades, these are global bidding orders which we got. And even in the consultancy and the QA business, the margins are definitely tougher. In spite of that, if you see the Q4 has, kind of stabilized at a good margin level, both in EBITDA or PAT, while it is lower definitely YOY. But to my mind, we would aim moving forward to keep both the EBITDA and PAT margins in these levels. It will be tough to maintain it, but yes, in terms of absolute EBITDA and PAT, we are aiming for a finite, appreciable growth. Margins, yes, to try and defend them or protect them to as close to these levels as possible.
Got it. Sure. And sir, one clarity on export orders. Can you give the number in terms of how much, we've received in terms of LOA and how much is in L1, which is not a part of the current order book of Q4?
So the 2 orders which we got were 300 crores from Mozambique, which is part of the 5,700 crores order book of 31st March. The 915 crores order of Bangladesh came in April, so we have not added that to the order book, but now that's also a finite order and a contract agreement has also been signed. So in fact, all the work already has started in aiming to try and push the manufacture and export by latter part of this year, so revenue realization starts happening.
Got it. Sure. I have a couple of more questions. I'll join back in with you. Thank you.
Thanks.
Thank you. Before we take the next question, a kind request to all participants that you may please limit your questions to 1 per participant, and for further questions, you may please join back the queue again. The next question is from the line of Yash Gupta from ThinkSight Advisory. Please go ahead.
Good morning, everyone. Sir, my question is on export. How export is looking out? We won some of the contract last week and some last quarter also. So how the export order books looks like, and what our realization we can have in FY25?
Morning, Yash. So yes, you see, international business under my Rites Ltd initiative has 2 elements. One is export of rolling stock and one is international consultancy. As far as export of rolling stock is concerned, as I said, these 2 orders in the last few months, 300 plus 900 crores, is a good step after a gap of 4 plus years. And we aim these 900 crores from Bangladesh, these are 200 coaches, and 300 crores from Mozambique, these are 10 locomotives. So by nature of their production cycle, coaches take a lesser time. And since the revenue realization happens only when we ship them, we are aiming to try definitely by Q3, Q4 to start getting some revenue, definitely from coaches, and aiming to try and get some from the locomotives also. In terms of further opportunities, we are bidding for a number of global tenders, and we are hoping that this trend of getting export orders on a competitive mode would continue in the coming quarters. In international consultancy, we've got some recent breakthroughs, and the way the trends are showing, especially we have also opened recently our office in the Middle East, in UAE, and looking for some opportunities there. Southeast Asia, there are a lot of opportunities, Bangladesh, Sri Lanka, etc. So, and Africa, in any case, we have a stronghold, a number of sectors. So I think international consultancy also, both in terms of fresh orders as well as the existing order book giving revenues in the next 2-3 quarters, we see a healthy trend.
Okay, sir. Sir, on the margin side, the orders which we have received recently, the margins are on the same page of 20 to 22%, or any difference, major difference?
You see, every order would have a different range, but as the factors remain that, like speaking specifically of the export orders, since both these orders were global tenders. These are not line of credit Exim Bank funded tenders where the competition is only among Indian companies. So once they are global tenders funded by different multilateral funding agencies or the country itself, they definitely have tighter margins. So as a whole, whether it is export of rolling stock or international consultancy, which also we are now getting a number of orders which are not funded by under the line of credit Exim Bank. So they are obviously on an international bidding methodology. So margins overall definitely are tighter in international consultancy as well as export.
Okay, sure. Thank you, sir.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Good morning, sir. Thanks for the opportunity. So congratulations on your consultancy revenue crossing 1,300 crores. So I just want an update on RMCL going ahead. How do you see the business? And secondly, sir, second question is, in terms of quality assurance, do you think the worst is behind us, sir, for that business?
Thank you, Parimal, for your encouraging words. And let me tell you, RMCL, this has been a hugely satisfying year. The revenue, if you look at the entire year, jumped by 30% plus. It was the highest ever revenue. The PAT jumped by 37% plus. And we gave a huge dividend of about 80 crores. And we got about 51% of it. So dividend payout ratio was about 99%. So in terms of performance, RMCL has really looked up and doing well. The trend has been maintained even sequentially. And I see this trend continuing. In terms of specifics also, the RTC tenders, the first PPA of 900 megawatts was signed. The second LOA for 700 megawatts RTC tenders was signed. There have been initiatives on the solar power plant, Bhilai, getting inaugurated under the developer mode. So in terms of both the conventional work of RMCL of supply of electric traction power as well as work on the net zero renewable initiatives, RMCL is moving in the right direction. And in terms of QA, I can say with full confidence and sense of responsibility that the challenge that we took on head on at the beginning of the FY, where the impact of the change dynamics started hitting us from Q1, by the end of Q4, there has been a huge shift. And as I said, we had started from 2/3 of the contribution traditionally being from IR as a client. By the end of Q4, it is changed over that more than 50 to 55% is non-IR clients. We have got some interesting orders across spectrum, whether it is defense, whether it is power distribution, discoms, whether it is the sewage or urban infra or water, or PM Vishkarma quality checks on the toolkits being supplied, an order of 67 crores. We've got an order from the GEM for vendor evaluations, which is about 14-15 crores. So in terms of the rapidly diversifying portfolio of the QA business, we are more than confident that we are out of the woods.
Okay. Thank you. And sir, just on follow up on the second question, in terms of your JV, sir, with the leading global players.
Mr. Mithani, could you please call back in the question queue for further questions?
Thank you, sir. Thank you.
Thank you. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah. Good morning, sir, and congratulations on good numbers.
Thank you, Viraj. Thank you.
My question is, sir, regarding export, can you give some more color? How did it plan out? You talked about 900 crores Bangladesh order. So how will the revenue plan out in this? How much will come in this year, next year? You can just explain to us.
You see the two orders of 300 crores, 10 locomotives and 900 crores, 200 coaches of Bangladesh. In terms of time frame, the coaches are quicker to make, and we recently, 20th May, we signed the formal contract agreement also. So now the final designs and approvals are underway, and we will start production of the prototype and manufacture very soon, in a month or so. We are aiming to start that. Bangladesh is also in need of these coaches urgently. So there's a joint effort from both us and Indian Railways and Bangladesh Railways to try and push manufacturing of these coaches, at least 1 or 2 rakes at the earliest. It's a mix of 8 types of coaches. So in the most conservative scenario also, at least latest by Q3, Q4, some revenue realization must definitely start happening. In terms of locomotives, these are require a longer time frame in manufacturing. So while efforts will be on to realize some revenue by end of the FY, but that's a huge challenge which we'll try and see what best can be done as the months pan out.
So follow-up to this is that, is it executable? This order book is executable in how much time? Like 3 years, 2 years? Like what would be the time of execution of the order book, of export order book?
See, both have time frames ranging from about 2.5 to 3 years. So that's the contractual milestones as per the contract agreements. But since we have got these orders after a long gap, and we've already seen the impact which not having an export order has had on our revenues and margins on 23-24. So our aims jointly along with the client would be to try and complete these 2 orders at least in 2 FYs to the maximum.
Okay. Thank you, sir, and all the best.
Thank you. The next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Thanks for the follow-up. So just wanted to know the status of the Zimbabwean order which we had announced last year.
Yes. So Zimbabwe, if you remember, was an agreement signed, a contract agreement signed in National Railway Zimbabwe and us for both the coach, the locomotives and coaches and wagons. But it was subject to their getting the funding in place. We have constantly been in touch with them, and our teams have been working together. They have moved forward post their new government also coming in place of getting the fundings moved ahead with the Afri-Exim Bank and other players who are there in that. So I think I would say that they're moving in the right direction, and we are very keen that they convert it into a formal LOA so that we add it to our order book and start manufacture. But as of now, the only thing which I can say is that it is moving in the right direction, slow and steady, but we are hopeful that it should get matured into something in the coming months.
Got it. Sure. And then lastly, in terms of guidance, in terms of top line, if you can, guide us for this year and next year as well.
See, both with these orders coming as well as us maintaining a trend of being a 1 order a day company. Q3 we achieved a milestone of being a 1 order a day company, and we maintained that in Q4. We got 100 plus orders totaling to 940 crores. So, and the way the trend is, these orders, both export and consultancy orders which we have been getting across sectors, I think we are confident that the 23-24, which is a year of consolidation, and as I said at my opening comments, moving sequentially every quarter, we have consolidated and hung on and pegged back the challenges and minimized the impact. So I think 24-25, we are confident that you will see an appreciable growth in the EBITDA and the profits vis-a-vis 23-24.
Sure. Any number for top line, say 15%, 10%, any number you would like to assign, sir?
I would not like to speculate in specific numbers. It's early on, but I can say with confidence that we are a bottom line driven company, as I always have been saying in my previous interactions, and my EBITDA and profit, you should see a healthy growth vis-a-vis 23-24, as you can see from the mix of orders and the number of orders which we are getting, even though with tough margins, but the way even if you compare Q4 vis-a-vis Q3, there's been a growth in EBITDA, there's been growth in PAT margins, there's been a growth in consultancy margins, there's been a growth in PAT. So with this trend being maintained, you would see in terms of year on year, definitely a substantial growth in EBITDA and PAT.
Got it. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Vinod C. Phillip Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. We hear from some of the rail EPC players that the ordering pattern has changed in the past year, where they earlier used to get orders directly from rail PSUs, but now they have to deal with zonal railways.
I'm sorry to interrupt, Mr. Vinod.
Yeah, am I audible?
Yes, sir. Can you please use your handset?
Yeah, one second. Yeah, is it better now?
Yes, better now. Yes, go ahead.
Yeah. So, see, what we hear from some of the rail EPC players is that the ordering pattern is shifting in railways, where, earlier they used to get orders from the rail PSUs. Now they have to deal with the zonal railways now. Since you also undertake turnkey projects, just wanted to hear your thoughts on this. So, what's actually shifting in the railways now in terms of the way the tendering happens?
You see, as far as rail infra is concerned, majority of our orders are consultancy orders. If you see the order book profile and breakup of our order book, except the erstwhile 3-4-year-old orders of the turnkey mode for Indian Railways as a client, all our orders on the turnkey mode are primarily in institutional buildings, etc. And some of them in other areas like, we've got one in station development, which we did the Ayodhya station on a cost plus turnkey mode. But primarily, we are dealing in consultancy with IR as a client, as a project management consultant or as DPRs and in terms of FSRs and alignment surveys, etc. So in terms of that, we don't see any change. We are the core. Our core strength is in consultancy, and in the last year or so, also we have continued to get orders. Yes, the change has been, which happened about 2.5 years back, in terms of nomination vis-a-vis competitive mode. That is the major change, which has been there now for about 2.5 years.
Correct. No, because the EPC players were mentioning that since they have to deal with the zonal railways, their receivables are taking longer to realize, and it was much better with the rail PSUs earlier when the payment used to be more timely compared to what IR does.
But we are not an EPC player we are a consultancy company, so I don't think that even if there is a change in that, it's not really affecting our business model.
Sure, I get that. Yeah, thank you, sir.
Thank you. The next question is from the line of Shubham Seeler from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, in terms of our consultancy order book of 2,600 odd crores, what is the split between non-IR and IR in this?
That is, you see, 2,600 crores has both in terms of QA business, in terms of across various sectors. So I can give you a total in terms of numbers. 2,600 crores has about 700 plus orders covering all my 13 verticals. And IR as a client has orders of different types in this. It has some on consultancy, some as I said on QA. So it would just very difficult to give you a number on that, which is not giving a clear picture. In terms of rail infra sector, if you see, rail infra sector is one of my 13 verticals. For rail infra, consultancy or project management consultancy that we do, we have two types of clients. One is Indian Railways as a client, and one are the other, whether it's the SAIL or the Coal India or its subsidiaries, or NTPC or its subsidiaries, or even private clients like Ultratech, Jindal, etc. So in terms of rail infra, if I see covers about 200 odd orders out of a total number of 700 plus orders that I have. So that will give you an idea that rail infra is an important, very important player in my total order book.
Okay, and one related to that. So in consultancy, you did mention in terms of execution, the split between IR and non-IR is 1:1. That is for FY24 or it is for this quarter?
No, that I mentioned in terms of the QA portion of consultancy. You see, the quality assurance business or revenue is part of the overall consultancy pie. So the change in the dynamics at the beginning of the FY, where we were hitherto for about 40 years plus were doing all the QA work of Indian Railways, that opened up to a competitive mode between 4 players. So at the beginning of the FY, the rough breakup of QA business was about 2/3 as IR as a client and about 1/3 as other non-IR clients, which by the end of the year in terms of numbers and volumes and revenue has now flipped to about 50% plus as non-IR clients and the balance as IR business.
Okay. And then this particular number of 1:1 in QA, so is this 1:1 is something that is kind of bottom, or probably that shift is still happening and that will further...
This will continue. As I said at the outset, this trend has been continuing sequentially. Our efforts to garner more clients have gained ground. I gave some examples of non-IR clients, huge orders which have come recently in the last 3-4 months. And this trend, we got a recent first international consultancy QA order for Sri Lanka. So this trend is going to continue. In terms, one effort is to increase the total pie as well as have as many varied clients as we recently got an order in the health infrastructure department of Haryana, some Rajasthan urban infra for inspection. So in terms of the trend, this trend would continue.
Okay, maybe one last thing. In terms of
I would request you to come back in the queue.
Thank you. The next question is from the line of Viraman from JM Financial. Please go ahead.
Hi, sir. Am I audible?
Yes, go ahead. Good morning.
Hi. So, firstly, I wanted to ask, what was the reason for the, steep decline in export sales this quarter?
Yes. So, you see, we had an opening order book of export at the beginning of the FY of below 100 crores. It was about 99 crores. And there was no fresh order of export which we received in the last 4 years during the COVID and the pre-COVID. We were servicing the 2 orders which we had just got prior to COVID. One was Sri Lanka and one was Mozambique. That we started servicing in the FY21-22 and 22-23. By the end of the FY23, we were left with no orders. And as these countries' economies were stabilizing post-COVID, they were still, arranging or funds to get and float new tenders, etc., for import of rolling stock. So last year was the first year where we saw opportunities coming up for fresh export opportunities, and then that's how we bid aggressively for them, and we've got these 2 orders in the last few months.
Makes sense. So you expect to recognize revenues from the Bangladesh and Mozambique orders in the second half of FY25? Is that about right?
Yes, for sure. That's that. And the between the 2, the coaches, as I said, have a lesser time of manufacture, so they would be easier to push and try and get some revenue by end of the FY. And locomotives will try, but definitely by early next FY they'll contribute substantially to the revenue.
So we should expect muted growth the next
few. I would request you to please fall back in the question queue.
Okay.
Thank you. The next question is from the line of Raj from Jupiter Financial. Please go ahead.
Yeah, thank you for the opportunity again. My question is, sir, since we have concentrated probably on the growth part, so would we be maintaining the same dividend policy in years to come?
Yes, Viraj, I can assure you that our business model, which we have been talking about in the last more than a year now, that we are not going to change 2-3 of our basic models. One, we are a debt-free company. 2, we are a low capex company. Our capex will always be in the range of 100 or 130, 140 crores, as you see from the trend. 3, we are not going to be, we are not a construction company. Our core strength is consultancy. So we'll try and see how best we can make EBITDA growth and profits. We are a bottom line driven company. With this clarity and stability and clear direction and vision of our company business model, I don't think that you should worry about in terms of trying to give the best to our shareholders. Our dividend payout ratio has been 95.2% for FY2023-24, and as we grow and as we aim to grow in both our EBITDA PAT, we will continue to give our best to our shareholders.
Thank you. Thank you.
Thank you. The next question is from the line of Yash Gupta from ThinkSight Advisory. Please go ahead.
Thanks for the opportunity another time. Sir, just want to check on the Chhabra Port that recent agreement has been done by the Indian government. So are we looking for any export consultancy into it?
As of now, we don't have any work. I mean, we're not part of any specific order or work there. But definitely, all over the international consultancy business, as I mentioned, and international, we've opened a recent office in UAE and looking for pursuing a lot of opportunities which are coming up in the Middle East, UAE, Saudi, Qatar, Oman, etc. So in terms of diversifying from our erstwhile geographies of international consultancy in Southeast Asia as well as Africa, we started Latin America last year. We got orders in Guyana, which we are getting good revenue from there. And we are now targeting the Middle East also. So I'm sure that we will continue to look out as opportunities if they come up in the future.
Okay, thank you, sir.
Thank you. The next question is from the line of Uttam Kumar from Axis Securities. Please go ahead.
Yeah, good morning, sir, and congratulations on good set of numbers. Sir, my question pertains to consultancy business. So this quarter we have clocked margin in around 45%. Is this sustainable moving ahead?
Yes, Uttam. I think, you see, in terms of the margins in consultancy has two elements to it. One is the project consultancy and one is the quality assurance business of consultancy. As I explained, the quality assurance business now being on a competitive mode, all the orders that we are getting, including the non-hire clients, are through a competitive bidding. So obviously margins, erstwhile margins, taken a hit, overall consultancy margins because of the QA contribution. In terms of project consultancy also, both in domestic and international, there has been, most of the clients are now going through EOI or tendering mode. So in terms of the shift from nomination to competition, every quarter there has been a shift in that. So yes, holding on to the overall margins is a challenge. But as you see the trend also in Q4, there has been, we've been able to hold on to, on a consolidated basis, EBITDA margins of about 27% plus, PAT margins of 20% plus, and consultancy margins have been in the range of, have in fact shown a growth from about 45% to about 50% now on a consolidated basis. So there has been a mixed bag. While we are aiming at execution of a certain high consultancy margin orders, the orders which we are getting are at a tighter margins. So, but in terms of trying to defend these margins or hold on to these margins as close to these levels, the effort would be continuous.
Okay, sir. Thanks a lot. I will come back in the queue.
Thank you.
Thank you. The next question is from the line of Shubham Shelar from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the follow-up. Regarding this Bangladesh order, what is the total number of coaches or rakes that we are supposed to supply in this order?
So this order is for 200 coaches, totaling to about 915 crores, $111 million, and it has 8 different types of coaches, both non-AC and AC. So they will take these coaches, ideally a mix of different types on a rake formation. So but there are 8 different types of coaches.
Okay. So in terms of 200 coaches,
I'm sorry to interrupt.
It is just a follow-up, I think, regarding the coaches only.
Okay,
So
go ahead.
Yeah, on the 200 coaches that we are supposed to supply, as per the agreement, what are the terms in terms of supply in FY25 and 26? Number-wise?
You see, the order is it's in terms of the total supply over a period of 2.5 years. So that is the time frame for total supply. It is in our interest as well as Bangladesh Railways' interest. As I said, they are hugely required. They have a huge requirement of coaches immediately. So we are trying to see to expedite the supply as early as possible to realize the revenue in this FY.
So is it 2.5 for 200 coaches, or it is on phases in terms of in 12 months is this number and then next 24 months?
Sorry, total. The contract says total. There's no intermediate milestones for supplies.
Okay, sure. Thank you.
Thank you. The next question is from the line of Raman from JM Financial. Please go ahead.
I just had a couple more questions. So I think, the last call, we stated we want to increase the ticket size of orders, especially in consultancy. Any guidance as to, what percentage increase in the average ticket size we can expect this year for consultancy orders?
Yes. So if you see the trend, first in terms of numbers also and in terms of the orders, first is that we got 100 plus orders totaling to 940 crores in Q4. So this trend of one order a day in terms of numbers has continued from Q3 to Q4, and we are aiming to maintain this trend in this FY also. In terms of total orders also, consultancy, if you look at, last year out of the total orders, fresh orders that we got about of 2200 crores, about 1200 crores plus orders was consultancy, which is about 55-58% odd. So in terms of number and total value, the orders of consultancy have been showing an upward trend. But in consultancy, there is a range of orders ranging from a few lakhs, few crores to a higher range, double-digit orders. So it depends on the works, in the quantum and the scope of work. The aim, that's why, is to have an optimum mix of both low-value and high-value consultancy orders, so that both in terms of total values and total numbers, there is an appreciable growth.
Got it. And secondly, what is...
I'm sorry to interrupt, sir. Could you please fall back in the question queue for further questions?
Okay.
Thank you. The next question is from the line of Viraj from Jupiter Capital. Please go ahead.
Yeah. Thank you for the opportunity again, sir. What will be the margins on the export side, which is with the competitive bidding coming in, like in terms of EBITDA and net? What will be your margins on the export, if you can throw some light on that?
Viraj, the margins will definitely be much, much tighter than the era where we used to get orders under the line of credit funded projects. So these are orders on a global tender where we are competing, like the coach tender, with the toughest competitors across countries who are the major coach manufacturers in the world. So obviously, getting orders like that and these huge orders, the margins are definitely tougher. Each of these orders has different margins, and our aim will be to even improve upon the margin, even against the one that we bid for, by earlier execution. So that's why even though these orders have a longer time frame in terms of the contractual requirements, it suits us both in terms of revenue realization as well as optimization of the cost to execute them at the earliest and optimize margin. But frankly and that's a actual fact that global tenders getting these orders, the margins will be much, much tighter than the erstwhile export margins, which were in the range of 20-25%.
So would it be still double digit in the double digit space? I would assume that. Correct to assume that, sir?
Whereas the margins would be different on order to order. What you should look for is in terms of getting good EBITDA and PAT at the earliest from each of these orders.
All right. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Parimal Mathani from Credential Investments. Please go ahead.
So thanks for the opportunity again. So I just wanted to update in terms of your leasing business. Can you throw further light, since I think the scope of opportunity is going ahead is only much larger now?
Yes, Parimal. In fact, leasing business, what is the interesting thing is that both in terms of the growth and opportunities and trying to hold on to its margins.
Hello?
Can you hear me?
Yeah, sir. I can hear you, sir.
Yeah. So I'm saying that in spite of one interesting development in leasing, which is like other sectors of my revenue also, that even the leasing sector has started opening up to competition from players now. And with this, we have optimized our resources and tried to get more orders. We have been getting fresh orders continuously in this business, and that is why by optimizing the execution of this, by optimizing the cost, we could improve upon the leasing margins. And in the coming year, you would see also trying to get at higher revenues and more opportunities and more clients in the leasing business. So this is a huge potential, and the requirement across the prospective clients has been increasing. Number of new clients, both in the private and public sector, have been approaching us, and we are moving in the right direction in expanding our client base in the leasing business.
So is it safe to assume, just to follow up on that there will be a faster growth in leasing business going ahead and with good margins?
Good growth and good EBITDAs. Margins may be tougher to maintain because now the competition is opening up more in that. There were players, but there are more players jumping into it, looking at the huge opportunities as more and more power plants, cement plants, ports, steel plants, etc., including private players coming in these sectors in a big way. The opportunities are huge in this. So more players are jumping into it. So we would aim to get more orders, more revenue, and more EBITDA. Margins may be a little tougher to maintain in the long term.
Okay, sir. Thank you, sir. Thanks for the call. Thank you.
Thank you. The next question is from the line of Uttam Kumar from Axis Securities. Please go ahead.
Yes, sir. Thanks for the opportunity again. Sir, what is our executable timeline for these turnkey projects of around 2,500 crores?
Pardon me, please repeat.
Sir, what is our executable timeline for these turnkey projects? We have got around 2,500 crores of turnkey projects. So what will be our executable timeline for these turnkey projects?
See, turnkey by nature on average take about 2.5 to 3 years on an average. Some may take where normally we are taking very limited turnkey projects. In fact, if you see the fresh orders in our turnkey have been only in the range of about 500 odd crores in the last FY. So we take very limited orders in the fresh orders in turnkey. So by and large, the orders that we take in the turnkey stream are areas where there is no major hindrance or no major obstacles in moving ahead in the execution. So with that, I would say a rough time frame of about 2.5 to 3 years. So this order book of about 2,500 crores would mean roughly about a 3-year window, even if there is with the existing order book.
And the margin will be same, sir, around 4% that we have clocked in this quarter. Is it sustainable for the turnkey business also?
Turnkey business by nature have a margin ranging from 3 to 4%.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Viraman from JM Financial. Please go ahead.
Hi, sir. Just one more question. I want to know what is your competition, both domestically and internationally, and any idea of the market share of consultancy for Indian projects that we have?
Yes, interestingly, we can say with confidence that in the infrastructure consultancy business, we are maybe the only Indian company, whether in the PSU space, private space, which has all areas of infrastructure consultancy except maybe oil and natural gas under one roof. So we have 13 different verticals doing infrastructure consultancy across airports, ports, highways, metros, rail infra, etc., buildings, and all possible areas of infrastructure. So each of my verticals has different competitors. Some may be common because they may be doing more than 1 or 2 verticals, but I don't see any single player in the PSU or private space who can compete with us overall, which has this entire bouquet covering all areas of infrastructure.
Got it. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Yash Gupta from ThinkSight Advisory. Please go ahead.
My question is on order book of consultancy. Sir, if we look at last 3-4 years, our consultancy order book is ranging from 2,500 to 2,600 crores from last, I think, 3 years. Sir, when we are looking for the next leg of growth into it, like by when in next 2-3 years we can reach 3,500 crores?
You see, consultancy orders by nature are small in ticket size. Primarily, the largest orders which you get in consultancy are project management consultancy, where you get a percentage of the total infrastructure cost, say 1% of 1,000 crore airports, you get a percent of that as a project management consultancy. So in terms of the number of orders, as you've seen, there has been a growth, and we're trying to get and maintaining a 1 order a day. Now, in terms of ticket size of these orders, obviously the ticket size needs to grow in a much bigger way to be able to jump substantially above this 2,500 average crores of order book. What can be definitely aimed is, and what we are aiming is that while trying to get some bigger ticket size orders, the aim is to get more and more orders and faster execution. So you may find that the order book in terms of number at the end of the quarter in total value may not see a bigger change, because also our growth in consultancy revenue, as I said at the outset, has been the highest ever in this FY. We've seen a growth in 10% in the project consultancy revenue. So our aim is to get, number one, orders, while the effort to get higher ticket size orders, but also to execute faster the consultancy orders so that the revenue realization and our positive effect on our EBITDA margins is in a much bigger way.
Okay, thank you, sir.
Thank you. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Sir, my question is, since we have concluded probably on the growth phase now, is it fair to assume we'll be back to the days of 2010-13, where the net margins were in range of 25% and having 15% top line growth?
Viraj, what we will definitely aim is, as we have consolidated our toughest year this year and taken the challenge head on, and as you've seen sequentially, there has been a movement in the right direction based on our strategy which we laid out at the beginning of the year. Our aim for FY24-25 will be to give you a substantial and a healthy growth in the EBITDA and the profit, because that is what our aim is, rather than just giving you a 15-20% growth in revenue and not being able to give you a growth in EBITDA and profit. So our entire strategy, whether it is in terms of getting fresh orders, whether it is in terms of cost optimization, whether it is in faster execution of our existing consultancy order book, it is to try, or our export order book, it is try and see a healthy growth in the EBITDA and profit, and that is what we are aiming for FY24-25 vis-a-vis 23-24.
So follow up to this, since you commented that we are considering probably on a growth path. So do you see visibility across the sectors in terms of order book, order coming in, and you feel the feeling is much more better than the last year? Is that so? Since you commented this, that probably, we are seeing some growth ahead. So if you just give some color on that, would be helpful.
Yes, for sure. When we started the FY, we were at the rate of about 0.7 orders a day. We had set a target that by end of the year, we would reach being a one order a day company. As you remember, we reached one order a day company in Q3. We maintained that in Q4. We got 100 plus orders in Q4 at 940 crores. The trend of this year also has been healthy. We are continuing to tap on the various infrastructure sectors. So if you see, just to give you an example, in the last few months, as I said, we got a ropeway order in the Northeast. We got airports orders in Odisha. We've got orders for IIT Bhubaneswar. We've got a tunnel order in J&K. So across the sectors, highway order in Maharashtra. So across sectors, we are seeing a healthy trend, and we'll continue to, we are confident that on an average basis for this coming FY, we should be able to maintain this trend of one order a day while trying to get bigger ticket size orders also, so that in terms of value also, the entire order book sees a substantial growth.
Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Prashant Galpade from ISG Securities. Please go ahead.
Hi. Hello.
Yes, go ahead, Prashant. I can hear you.
Thank you for the opportunity, sir. May I know the current order book as on today, and what is the breakup of order book?
Yes, the order book 31st March is 5,700 crores. Consultancy is 2,600 crores. Turnkey is 2,500 crores. Export is the order of Mozambique, which is about 300 crores. And the balance leasing and subsidiary, etc., is 300 crores. We haven't added the Bangladesh order of 900 crores, which came in April. So this is an add-on over the 5,700 crores, which was there on 31st March. And besides the other orders which we are getting in Q1 of this FY.
Thank you, sir.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen who like to ask a question may press star and 1 at this time. Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Mudit Kabra for closing comments.
Thank you. We would like to thank Sri Rahul Mittal, Chairman and Managing Director, Sri Arun Kumar Singh, Director Projects, Dr. Deepak Tripathi, Director Technical, and Sri Krishna Gopal Agarwal, Director Finance, for giving us this opportunity to host this call. We also thank all the investors and the analysts for joining this call. Any closing remarks, Rahul sir?
Yeah, thank you, Mudit. As I said at my opening remarks, that we are happy and encouraged, confident by the way we stuck on and consolidated and moved on the right track in the strategy that we had laid out at the beginning of the FY, and we took the challenges head on. And having built up on that sequentially, we see a good trend, this momentum continuing in the coming FY. And our two core strengths which have been there, we recently in the month of April, we completed 50 years, and we feel proud that today as we touch 50, a milestone, we are still on a positive momentum, and having achieved the Navratna status also a few months back. Our two core strengths which have been there for 5 decades, which we'll leverage on, and the one is our strength, the core expertise in core design, engineering design, which we will continue to leverage on under our Abhikalp initiative. And the second is our international presence, whether in export or project consultancy under the Rites Ltd initiative. So these two pillars will be the key focus as we leverage this momentum on the coming FY. Thank you.
On behalf of Elara Securities Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.